This conference will now be recorded.
Good afternoon, everybody. This is Greg Morton. It is Sunday, April 30th, 2023, and this is the weekend video update for Canslim Growth Style Investors, brought to you by the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group. As always, this review is for educational purposes only. I'm not recommending any stocks or securities to buy or sell, and all investing has substantial risk of big losses, particularly now. We'll learn first and only then invest, and Canslim's a registered trademark of Investors Business Daily. So today we're going to look at the M factor current market review. That's the most important thing we do every weekend. Then some action plans thought currently as this chop fest sort of meat grinder market seems to continue. We'll look at the Dream Team Elite 8 after a week. That was kind of a concept I introduced to you last weekend, and we'll just see what that list of stocks looks like. And then I'll talk about the next monthly meeting at the Stockyard Meetup Group, which I believe is Wednesday, May 10th, if I remember correctly, but it'll be in here. So the M factor. Per O'Neill in IBD, it's important to remember we're always diagnosing, we're not predicting, we're just interpreting where we are, and we look at three things in this order of priority. And it's really important to remember that order of priority because number one, we want to look at the action of leading stocks. So this is strong Canslim stocks, both fundamentally and technically. Even if you missed them, we still watch them to get our clues. And this is what's really difficult right now because anything that breaks out, well, if it's a regular breakout of a standard base, those do not seem to be working very well. And it goes back to what Bill O'Neill warned us about. Breakouts don't work in bear markets. And so that's just a clue that, hey, we're still in this difficult bear market and not really up on the upside of it yet. And then secondly, even the early alternative entries that are proper are just getting slapped back down after a day or two. We're just in a rare situation where the indexes look fine, but there's this turmoil just boiling underneath the surface, and the indexes are being held up by a few big mega cap tech stocks, and then everything else just bounces off the bottom, or stocks that have just tons of overhead supply. They're still very deep in the base. So it's very difficult. Look at actions of stocks owned. Well, the group teaching portfolio is just treading water on a year-to-date basis and has a substantially reduced percent invested currently. So we'll look at that. And then the market pulse, distribution day count, price and volume on the indexes, which is kind of wrapped up in the coloring book. So let's hop out of here and go over to MarketSmith to look at those first. Oops, sorry. Didn't have that on the right screen. So here's the NASDAQ on a daily basis. So again, after really getting whacked at one point, now it's kind of come back above all moving average lines. And in fact, when we get to the coloring book, the MMTS on the NASDAQ flip back to green. So looking like it's trying to make some progress and, do have some decent above average volume coming in for 3 days. So this is just still kind of making it difficult when the breakouts aren't working. And we actually this week, we did close below the follow-through day low, which normally is a bad signal and indicates the rally has a significant percentage chance of failing. So here's the S&P 500, very similar to NASDAQ, back above all moving average lines. They're both stacked in the correct order, so that is constructive there. NYSE, same thing, that 50 is still plunging, so we'd like to see that turn up. Dow, same thing, above all 4 moving average lines and kind of popped above this recent high back to the left. But then the small caps are still pretty trashed. So you can just see sort of had the 50 cross over the 200 there, what people call a death cross, just a bad technical signal. And these both look bad. And of course, there's some financial exposure in there, and the bank contagion is impacting those. So that's what those look like. If we jump over to the coloring book, oops, got that colored wrong. Just fix that while I'm here. Just supposed to be dark green. So if we jump over there, we have 8 buying days, 6 selling days in our 25-day window. So that's constructive. I mean, the buying days are outnorming the selling days. Distribution day count is not very high. We have 3 black numbers, 3 on the NASDAQ, 2 on the S&P 500, and 2 on the Dow. And then we've just had this flip-flop back and forth this week where MMTS signals changed and then changed back in 1 week. This is a slower moving signal. So to see it flipping back and forth, particularly going from green to red, just skipping yellow, going red to green, skipping yellow, those are pretty dramatic changes there on the NASDAQ. And so that's just highlighting the volatility. Still have a couple that are red, the NYSE, R2K, and the S&P 600. IBD flipped to yellow this week under pressure. Window of opportunity signal still green. And then we still have a massive trend of net new lows on the NASDAQ. I think the NYSE might have had a green day on Friday. I got to double check that. Then we had a lot of data and everything coming in, and I just haven't filled in all the, there were a couple breakouts on Friday, so I've got to fill those in. But just a lot of whipsawing, volatile action that makes it a very difficult environment, I think, still. And we look at the group teaching portfolio, it's only 27% invested. Year to date, down a quarter point. That one I was talking about treading water. So even though we only have 2 positions left, one of them is some Fryer puts, which is our short position in that company, which those are doing well. And then ON, which has been reduced down. It's back to just a full position size. But even with those strong gains, unrealized gains in the winners, when you factor that in, still just flat year to date. So been a difficult year, and I think it sort of continues to be. So during bear markets, they either scare you out or they wear you out. The COVID bear was very fast, less than a month. That was a scare you out and was unusual in its shortness anyway. The current bear is wear you out. So it's been a very long bear market. It really went back to February of 21. So it's over 2 years old now. Or even if you look at the peak in the NASDAQ, it was right around Thanksgiving of 2021. And maybe it gets to the 2-year mark from that. There's just no way to predict. So it's just quite a chop fest. Got daily rotation under the strong, calm surface of the indexes, and that divergence is just really difficult for us to handle. And I think I'm going to go back to what I talked about last weekend. Right now, there's 2 current, very critical survival tools for us. These are relatively new. I do think they're extremely critical. And some of our traditional tools are not serving us as well. Follow through days, low distribution day count, the IBD market direction call, they just haven't been the best tools right now. Still valuable tools, still tracking them, but these 2 have been more critical, these key parameters. And I say new in the sense, I don't think they were emphasized much at all until the last couple years, and now they're being discussed more and more. So the first one is percent invested. So the market school model has always had this to an extent, but now it's much more involved. They're focusing in on it in the newspaper as well as IBD Live, and they're sort of giving a recommended percent invested range. So this is a major risk management tool, which is obviously very important. We always have to survive to fight another day when we're not in those super strong bull markets, and we're not now. So IBD currently, they ratcheted down, and in the paper on Friday, they said 20 to 40% is sort of the recommended range. Now, again, if you own all the leaders and you're up 50% year to date, you can press on the gas a little more and it can be 40% or higher. If you're struggling trading water like the group teaching portfolio, obviously I'm on the lower end, lower half of that current range. So it's still a guideline. It's to make your own decision, but if you're outside of this range, you've got to study your trading style, your results, and make a decision on, hey, should I be outside this range? Particularly if you're more than 5 to 10% either way, over or under. And again, might be 0% invested, waiting on that new trend of new highs, and that may be fine. But always, 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 you need to be able to immediately answer the question, what percent invested are you right now? And so, the group teaching portfolio spreadsheet is set up where it tracks that. And I see it every week in the weekend review for sure, and can check it on a daily basis. It'll update automatically. Then the second new indicator is new highs, new lows. So if we're in a strong bull market, we're going to have a lot of new highs day after day after day. You just can't have a strong bull market without that happen. It's mathematically impossible because there's so many stocks in the market. So two major proponents of this indicator are John Boyk and Matt Caruso. You can follow both of them on Twitter. And some do it on the market overall. Matt tracks it on the NASDAQ and the NYSE separately, with a little more emphasis on the NASDAQ being the more important of the two. So again, just until we have a trend, Matt considers a trend at least 3 days in a row of new net highs on the NASDAQ. He's just mostly in cash and staying on the sidelines till he gets that. And that has served very well in this bear market. And it will also serve very well when you're having it and when it's going up and when there's more, not only more new highs, but even over, at least 50 a day on the NASDAQ, then perhaps we're making some progress. So current market thoughts, still not the market we're looking for. Any increased exposure better be on a nearly perfect entry early or standard breakout on nearly a perfect Canslim stock. So, we just want to be very, very careful. And I mentioned that, Bill had said if the stock doesn't have at least 40% earnings growth in the last reported quarter, it doesn't have the characteristics right then to be a true market leader. Of course, we're not just investing in true market leaders. We're starting with the proposition, can the stock get me to the 20% profit goal? But the 40% is a good way to just make sure you're looking at the best of the best, have 40% earnings growth and at least 25% sales growth, and more is always better. So right now, perfectly fine for me to not increase exposure until there's a trend of new highs on the NASDAQ, or until I get one of my perfect setups, or a setup, not that my setups are perfect, but something that meets with what I think are good setups. So really key right now, what percent invested should I be in light of the current risk reward situation and what's happening with stocks setting up and breaking out. And also, a lot of stocks on earnings have just been getting hammered. Crocs, ticker PI. There were just a whole lot. Mobileye, Slab, STM, TXN, AYX. A lot of growth type stocks, just really, really brutal hits on earnings. So current market picture for me, still a Edward Scissorhands market, just slicing and dicing, particularly underneath the surface. Really, really difficult still, and ugly. So let me talk a minute. What about market catalysts? What's going to move us further down, or what's going to move us further up? Let's look at the downside first, and this list is longer. So we're getting ready to get into the dog days of summer volume. You always hear sell in May and go away, and I think that's tied in part to we get lower volume during the summer, and lower volume always equals increased volatility. So it's very, very difficult to make progress. So we have that coming up. I mean, we don't go by sayings like sell in May and go away. Some years we've had a totally strong May or totally strong June, even if the overall percentages aren't good. So EPS season is getting ready to wrap up by May 15th. And so it's going to be July or 10th before we get another one. So really no catalyst there. You do have reports always trickling in from companies that are not on a calendar year basis fiscally, but most of them are. So May 15th is sort of the wrap up date for the vast majority. We got this banking contagion still going on. We had that really big event where we had the second and third largest failures ever over a Friday to Sunday. Then we had Credit Suisse. Now we have FRC. It's getting ready to get taken over per the headlines, it sounds like. So that can still expand, still can cause some problems, particularly as we get into low volatility trading periods. We have international tensions and conflicts, China, Taiwan, and more. And of course, we have the Fed, we have inflation, we have interest rate situations and balance sheet. I should have put that in there. And then we have one coming that we're starting to read about, which is a commercial real estate contagion. So most commercial loans will either have balloon due dates, like every 5 years. So those are going to come up and the banks can refuse to renew them. Now, the banks don't want to own a lot of real estate, particularly commercial. That's not as easy to get rid of as houses were back in the housing bust. And I think the banks learned something from that, as they don't want to be in the real estate business. So, but when they have those balloon notes, hopefully the bank's going to refinance, but those rates are going up. So that's just going to be a difficult situation. And I mean, I think it was Google, whatever massive campus they were building, they've stopped. They said we're not going ahead, at least not at this time. So I think we're going to see more and more of that. So I think that's a downside catalyst. At some point, the recession will become official. That one's probably not worth putting on this list, but it will be in some people's mind. I'll be glad when it becomes official because that's probably about the time things will start turning around. So just the way it works. So on the upside, some point the Fed's going to end the rate increases. So should be some upside catalyst there. The Fed will actually start talking about cutting rates or the timing on that. Russia-Ukraine war could end. I think that would help. And then we have an election year coming up. So the market always looks ahead. And if the market's pleased with what it's seeing, whatever that may be, there may be some trading opportunities there. But for now, still stuck in study hall. So we need to be studying. Always want to do the weekend routine work. It's very revealing to you. Helps a lot on tracking the action of the Canslim growth stocks, which is, why I can kind of identify, and other people that talk about it and study the market can identify that you've got this small group of leaders and then you have all these dogs bouncing that aren't properly actionable for Canslim growth stocks investors. So we use the Market Smith Growth 250. We use all the list in the paper. If you don't have Market Smith, just use all the list in the paper. Study those charts. And then long term, still super optimistic. At some point, we're going to party like it's 1999. Expectation is for a strong bull market down the road. We just don't know how far down the road we're going to have to go. And we're getting tired of this car ride. So we're like, Mom, when are we going to be there? And there's no way to know when a follow-through day will be the one that kicks off that new bull market. So let's look at what I talked about last weekend just for kicks. So I told you, hey, just put together what I called a dream team or elite 8. This was assuming the market was not bad, big assumptions, assuming I could enter these stocks properly and scale into full positions. What are the 8 that I would say, hey, right now, these would be the elite 8. And of course, this list can change and will change as time goes by. So I'll keep this one and maybe start a new one at some point. So it was sort of asking myself, what do I think are the best of the best in the Canslim universe right now? Was as of last weekend. I talked about why it was 8. There might not even be 8, but there were 8. Remember, Canslim's a concentrated system. Most Canslim investors target is 8 to 10 equally sized position. When we get a new bull that's progressive, you might go up to have 12 positions, not all of them full, and then end up with 6 to 8 as time goes by. Again, the 8, you're going to be taking all or some profits at the 20% profit goal, and only 1 or 2 and 8 is going to be a true market leader, probably 1. And you want to keep your losses small, and there will be losses. And we want to force feed the winners at valid add-on buy points. So when we're doing that, that's how maybe you end up with 6, as we're in their concentrated positions as we're into a strong bull market. And always, we don't want to water the weeds and pull the flowers. We want to water the flowers and pull the weeds. So again, this is a wish list. I was not saying any of these are actionable. Never chase. It's better to miss than to chase. And so let's hop back to Market Smith and look at those just for fun and see what happened with them this week. So here's ON. EPS is coming up. They say 16 days. I was thinking it's a little bit further because this is not, I don't think they report on a quarterly basis. Where does it? Somewhere it shows me that. Well, no, maybe they do. Okay, maybe wrong on that. So this one's still holding up. It triggered the green flag, the power from the pivot. It was up 20% in less than 3 weeks from the breakout. Pulled back, consolidated. It deserved to do that, and it's still just sort of going sideways. So maybe it builds a new base and gives us a new opportunity. It's one of the rare, true growth stocks with good numbers that's above all the moving average lines. And there it is on a weekly basis. So again, holding up, that one's good, not really giving us an entry right now. Shockwave Medical, building a base still on the weekly chart. Would be really nice to see a handle. Deep base, 46% deep, so anything over 41% does struggle. So it'd be great to see a really nice handle, or even if it formed a 5-week flat base in there, it'd be nice. LNTH, this is a good one to say, hey, here's why we take some profits at the 20% profit goal, because it was there. Maybe it forms a new base and gives us an entry. This one has triple-digit earnings and sales. So just a really, really strong stock, looking for an entry point and the M to improve. Axon, okay, this one broke under the 50-day. There we go. Did not even get to the 20% profit goal. Got close. PANW, this one broke this week. It's under the 50-day. Not looking good. Dexcom reported earnings. Sort of had a shakeout day there, so that's okay. It didn't gap on earnings. That was the one I was watching for potential buyable gap up entry. So maybe the market just holds it down for a little bit. Let's look at it on a weekly basis. Yeah, still trading tightly. Very strong earnings. Sales, they're not at the 25% level, but at 741 million a quarter. So a little bit of leeway there. Could be on that list. The RS line needs to go to new high with price. So just keep an eye on it. Mobileye got slammed on earnings. The daily chart. Ooh, that's tough. It did recover to a high range finish, but broken, nothing to do now. And Wingstop continues to be constructive, has earnings coming up this week. So we'll see what it does. So those were the 8 that I put on there. And again, that choppy action, when you add that in with some of those, like Crocs got slammed on earnings, PI got crushed. Goodness. What was that? Down. Shoot, I lost it. Oh, 39% on earnings. I was thinking, it couldn't have been down that much. It was. So almost a 40% drop on the EPS day. And that's one, we put it down here just so I can see it. I think that's the one. Yeah. So this one, I could never get this one on my top watch list because it had 1,797% debt. And it's just a big wave all for me. I don't like more than 100% debt, even though we do have that on Lantheus, not by a ton. But that's one I just never could bring myself to enter. I think I had tried it before, but particularly in this interest rate environment, that's too big a red flag for it to be on my top tier watch list. So let's go back over here. We looked at those. We're still in EPS season, so we have a bunch more coming this week and the following week, obviously, and running over. Well, it'll be about done in 2 weeks. So it's massive. Got to be prepared. ALGM, which has also round tripped all its gains now, so got to take some profits at the 20% profit goal. And ON had good earnings reactions and made progress. And the EPS overall can be a catalyst for the market. Again, Dexcom, I was focused on last week. It did not gap up. This week, kind of watching ANET for EPS reaction. In fact, just look at the chart real quick because this one suddenly has a new base. So on the weekly chart, it got in a flat base, 11% deep. That's constructive. And so we'll see what it does on earnings. Has Canslim earnings and sales. Just a good one. So I think earnings, I believe it's Tuesday after the market closed, but you can check the press release. I've got it in my notes, my personal notes. So it was in the New America recently, so you can go read about it. But definitely it did not have a new base till just this week. That would have popped up Friday night. So we'll study that one and see what it does. If it had a viable gap up, per my criteria, probably try to reduce size position, just have to watch. So monthly meeting, Wednesday, May 10th. You can register at the Stockyard Meetup site. Tuition's $12. You can attend live if you want. You don't have to, but everybody gets a recording, slide deck. If I talk about any other webinars, articles, etc., I send those out with the post-meeting email with all the links in it. And if you haven't ever come to one of my monthly meetings, when you sign up, I send you a courtesy copy of the prior month's meeting just to bring you up to speed, and you can see what we can cover. So sort of like buy one, get two if you're a first timer. So in April, we covered a bunch of basic Canslim teaching. A lot of it was brought to us by Jim Ropel and Charles Harris. And we looked at two rarer patterns, the high tight flag and its nephew, the ultra rare short stroke pattern, which we did have on ON, which broke out and failed. So it is rare and they rarely work, but still worth knowing about. And we updated the short thesis on Friar Battery. So prior meetings, you can order these. If you don't have a set of written cell rules and you're in study hall, great time to be working on that. I spent 3 months teaching that. So I think that's very helpful. I think a lot of people who don't have written cell rules should get those and study them. The prior meetings, they're $15 each, so you can email me about that. And then also, if you don't have a complete weekend routine, I sort of did 2 weekends on that. So you can email me at the Greenville IBD MU email address, join the meetup sites. Those are, of course, free. You can follow me on Twitter. I update the coloring book daily. And then you're on my YouTube page. So like and subscribe while you're there. And there's other videos there that will be helpful. So that's it. Hope you have a great weekend routine. And I'm out of here.